Southern Ontario is the heartland of capitalism in Canada. So it's hard to do business here anyway because it's incredibly competitive. Even though we have incredibly successful co-ops in Ontario, it's difficult for people, first of all, to understand the model. There needs to be an understanding of this experiment, what it means, how it operates, where it exists within the economy.
You know, capitalism is a very, very competitive system. That's why it's so dynamic. It's competitive even when you have big monopolies, that may dominate in a given industry or a given sector, because they still compete with one another over rates of profit, over access to capital markets, over selling their corporate bonds. But they do that in a competitive and chaotic way. There is no hidden hand behind this that makes it smooth, that brings it to equilibrium. This is the kind of propaganda that people are taught when they study economics courses. So it's a very competitive system, not so much in the sense that everybody has the same chance in this competition. Of course, people know that that's bullshit. The dynamic of the system depends on accumulating more and more. And it's not, again, because, capitalists eat babies for breakfast, because they're evil people. It's because if you don't accumulate more and more, you then lose your capital to those who do accumulate more and more.
Capitalism really is the tendency towards more private and exclusionary ownership of the means of production for profit. And in that sense, cooperatives are quite important in transitioning us away from that, away from a focus on profit, away from private ownership, to more collective and community ownership, looking towards social goods.
The trouble is that when people try to do that, they are usually very small fish in a market. And in order to survive, they have to compete against capitalist firms. And then the discipline of competition gets imposed upon them collectively. So the competition can have an effect even on those people who try to behave in a cooperative way.
Welcome to Meridian. Thank you. So we're quite proud of our new office here in Etobicoke. It's only, not even a couple months old.
So sweet. What do you smell? What a camera guy.
One of the themes we're working on is really instilling a lot of additional innovation, entrepreneurialism within our culture. We talk about an ownership culture. So trying to create an environment that is conducive to that. Unlike a bank where you have, a bank has customers and then you have shareholders. But in the case of a credit union, your customers, which are your members, they are your shareholders, right? So when you come into bank with Meridian or any credit union, you become a member owner.
Credit unions are financial consumer co-ops. They're different in legislation, so often people see them as different, but really they're there to service their members' financial needs through a collective organization. Now, the interesting thing about credit unions is they started off being very locally specific and therefore very accessible to members democratically. Since 2012, when the Harper government changed the Credit Union Act, they are now allowed to not just merge, but merge across provincial boundaries. And so credit unions are really struggling with attempts at innovating to maintain that democratic principle in the face of increasing mergers and acquisitions and larger financial entities.
We're certainly the largest credit union in Ontario, fourth largest in Canada, about 12.2 billion in assets owned and managed, and we're at 71 branches now. I'm quite proud of that. We've grown by 10 branches just in the last 3 years. We like to say that the biggest opportunity for credit unions to move forward is in Ontario because it is where we are the least penetrated. We are investing a lot more in our marketing programs, and we're being a lot more thoughtful of how we communicate our message to people about who we are and what we're all about, what we offer. I like to say we build stronger communities, one member, one household, one business at a time. We don't want to be a stuffy Big Five bank. We are a local financial institution, and we want it to feel local and comfortable in here as well. You can see in our kitchen here, again, one of the big hits of our new office has been all these fancy coffee machines, right? So these are the fanciest ones. They'll make anything you can think of, they will make for you. So, you know, we're at a certain size where we have the breadth, we have the sophistication, the capability to do a lot of things that our larger competitors do, right? We have sophisticated risk management. We're doing a lot on the technology side to make banking services more accessible for people through online, mobile. We're collaborating with some other credit unions on some of these initiatives. So technology is a big thing. Certainly we've reflected that in the office, but we're also reflecting that in our member experience. Whether you're worth 5,000, 5 million, or 10 million, you will have a very consistent customer experience or member experience because we treat members of equal value. So yes, a high net worth individual might need a certain type of wealth advisor. We always tailor who from our team is assisting members based on their needs and where they are in their financial evolution.
You know, finance used to be called high finance. The French called it haute finance. And this was something that most people had nothing to do with. You know, it was financiers who lent money to kings to engage in wars. Now everybody is involved in finance. Their paychecks go directly into the bank. When you go into the bank to deposit some money, the banker will say to you, no, don't put it in a deposit account. You know, you should put it in this security. It'll be traded on the market. You'll get maybe a higher return, etc. People's pensions are bound up with this. So people became very dependent for their livelihoods on the way in which international finance operated. When the whole thing collapsed in 2008, the banks were saved by governments. If they hadn't been, what would have been the consequences for all the people who needed those banks to survive in order for them to be able to survive?